Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lien.
Hello, everyone. Good morning. This is Kathy. It's morning time for me. I'm sure it's evening time or midday for some of you. Welcome. Say hello. This is a two-way conversation. I always like to involve everyone who's in the room. So please say hello. Let me know you're here. Let me know, where you're coming in from this morning or this evening, depending upon what part of the world you're in. Let me know you're paying attention. I love fist bumps. So if you're ready to talk, give me a fist bump and let me know you're ready and here to talk and listen to what my thoughts are for the markets this week. Hello, Andrew, Snowman, Miss Actor coming from London, Phoenix. I'm sure we've got some friends oftentimes from Australia, which I never know how you do it because it's very, very late in Australia. But wonderful. I'm so glad to see that all of you are from, all corners of the world, Europe, Barcelona, one of my favorite cities. Wonderful. Slovakia. Okay. Now, we've got a lot to talk about today. And, I definitely want to talk about everything that is going on in the markets, including what's going on in the US dollar, what's going on in Bitcoin, what's going on in gold. Let me know in the chat box, what you want to hear the most about. Are you most interested in dollar, Bitcoin, or gold, or indices? So I make sure that I'm covering what you're most interested in, and we're not skipping any corners here. Wow, Nigeria. Web3 God is one of my most interactive YouTube commenters, and I appreciate that. Dollar. Okay, we'll talk about the dollar. Bradley Investment Group. Good morning, Terrence from California, 5:48 a.m. I've traded from California. It's not fun for me. I'm up way too early. Dollar, crude oil. Okay. I wasn't really going to talk about oil, but you are interested. So I will certainly cover that. Gold. Sounds like, none of you want to hear about Bitcoin. Is that true? And that's fine. I'll talk about it briefly, but I'm glad to hear that most of you want to hear more about what's going on in the other markets. Okay. Sounds great. All right. So what we're going to do is we're first going to talk about, what's going on in terms of market sentiment. And I think that will address some of your questions, which is what's going on in the dollar, why the NASDAQ is surging, and, what's the outlook for gold. So what I'm going to do is I'm going to share with you my screen and, talk a little bit about how I generally start my day. So let me share with you my screen. All right, here we go. So this is my screen. We're looking at the Eurodollar chart. This is not what I want to talk about right now. What I want to talk about right now is we're going to look at the upper right-hand corner, which is NASDAQ. So every morning, regardless of whether it's a Monday or Tuesday, Wednesday, regardless of the day, I come into my trading day and the first thing I look at is what's the market doing? And as you can see, stock futures are strong. Stock futures are up. Dow futures are up 337 points, fresh highs in stocks this morning. One of our friends here asked about NASDAQ. NASDAQ is not at a new high, but still, a gap higher in the NASDAQ, more than 0.5% increase. S&P also gap higher. Now, what you may notice is that we actually have gaps in many of the markets. We have gaps higher in stocks. We have gap lower in U.S. Treasury yields. And this is actually kind of an important drop in U.S. Treasury yields. And yes, I will talk about everything. This is an important drop here in U.S. Treasury yields. We have gold prices Now, we don't see, if we look at the intraday charts, we don't see the same gap in gold prices, but gold prices are pulling down, which is kind of interesting because gold prices are lower, but and the dollar is also lower. And you can't really see it in this chart, but if you go in the intraday charts, you also see, let's get rid of my lines. You can also see this gap here. We see it in dollar yen, we see it in euro dollar. So basically, US dollar gapped lower at the Asia Open. Stock futures gapped higher. Gold prices moved lower, and Bitcoin is kind of down today. And, all of that is interrelated. They all are due to one thing. And that is over the weekend, or I think it was late Friday, maybe, Treasury Secretary, President Trump selected his Treasury Secretary, who's, who the market is kind of excited about. I mean, Scott Bessent is the man. He's the person that, Trump has chosen as his Treasury Secretary. And I did a little video about him on X, but I want to talk a little bit more about him this morning. But you can go to X and you can see I did a little video on what to know about the Treasury Secretary pick, about Scott Bessent. But today, this morning, let's talk about why the markets are behaving the way it is on Trump's new Treasury Secretary pick, and basically what it means, what he means for the market. Now, in general, there's a couple things to know about Scott Bessent. Number one, I think the most interesting thing to know about him is that he used to work for George Soros, and he actually worked with him, for him, and contributed significantly to their trade that broke the Bank of England. Now, some of you may be familiar with it. Some of you may not, because you're relatively new, but this is one of the legendary stories of the market where, one person or one fund bet so hard against the Bank of England that, he basically broke the Bank of England. And, he basically, this is one of the biggest stories in the market, basically made $1 billion and forced the British government to withdraw from the exchange rate mechanism, devalue its currency, and it was disaster. So our new Treasury Secretary, Scott Bessent, let me share my screen again. Scott Bessent is a mastermind in that. He played a very big role in breaking the Bank of England. So what does that tell us? That tells us that, first of all, he's a huge risk taker. He's willing to be, he's willing to, do what it takes, even if it's out of convention, to achieve the goal. I mean, at the time, the goal was, obviously $1 billion of profits. Maybe they didn't think they were going to make that much, but the goal was, quite a bit, was something that they took very bold steps to achieve that goal. He's also very, very in tune with the markets. His background is he runs, a huge hedge fund, and the markets, the reason why stocks are up today is that the markets like the fact that Trump picked one of their own. They love the fact that Trump picked one of their own, Scott Bessent, to head the Treasury Secretary job. Now, what's really interesting about the movements in the markets is that Bessent is not dollar negative. I mean, he made, after the election, I'm going to read to you a comment that he made. He said that, Trump's election drove the single biggest one-day increase in the dollar, and it basically represents the market's confidence in the U.S. leadership. But then he also said that the tariffs from the Trump administration will likely lead to a stronger dollar, and that a weaker dollar is very abnormal as a result of the tariffs. But, lower inflation or lower rates should drive the dollar lower, but he doesn't think the dollar is going to be overly weak. So he is telling us, super, market savvy new Treasury Secretary is telling us that he does not think Trump's policies are weak, are negative for the dollar, are weaker for the dollar. And yet the dollar fell. Why in the world is that? Why in the world did that happen? There's some arguments that, it happened because, first off, the markets really, really like a pick that, it's with, I guess, such deep Wall Street experience. They like that, he picked one of their own. They are cheering that with this huge rally in stocks. They think that, the Treasury Secretary pick is good for the stock market, is going to lead to more growth, which means that, which I guess, they've seen as pro-growth. It's leading to, U.S. yields coming down a little bit, and that is leading to the sell-off in the dollar. And what's interesting, though, is that gold is also lower because gold is priced in dollars. So you would normally think that because gold is priced in dollars, with the dollar falling, it should lead to higher gold prices. But it didn't today. Why? It didn't today because gold is a safe haven asset. And because gold is a safe haven asset, and because today is kind of a risk on day, stocks are up and they're risk on. That means that, gold prices are falling, and, that is the move that we're seeing today. Bitcoin is lower. There's no specific reason for Bitcoin is lower. We have a consolidative top here. I think the market's taking a little bit of a breather before it kind of wants to test 100,000. There could be a lot of option barriers, limit orders around 100,000. I still think it's just a matter of time before it's broken, and that any dip in Bitcoin will be bought for a push higher to higher levels. But, the one thing I want to talk about, because we're all traders here, all of this is really interesting philosophically, right? When you see our chart like this, and this is where our little interaction comes in, and you see a gap, what do you think is going to, where's my circle? Let's see. All right, let's free draw. Going crazy here. For some reason, I can't find my drawing indicators. Where's my free draw? Oh, here it is. I'm just going nuts here. Oh, maybe it's not. I don't know. Okay, when you see a gap, and you see, let's say we see this gap in the euro dollar. Euro dollar gaps down. What should you do? Should you sell the gap or buy the gap? There's no, there is a wrong answer, but if you give me the wrong answer, that's okay, because I'm going to explain it. Because we're traders, and the most important thing is to learn how to react to price action like this. Fundamentals we hear about, you learn about, and you really don't get the grasp of it until after the fact. But gaps we see all the time. What do you think if you see a gap like this in the euro dollar? Should you be buying or selling? What do you think? Let's see. All right. Some of you are saying the gap will be refilled. Buy the gap. Return to the gap. Buy the gap. Sell the gap. All right. Come on. Keep going. Keep going. And I will explain to you how to approach gaps, because it's happened. It can happen again. And especially with the potential erraticness of Trump and the comments he makes during his administration, there could be a lot of gaps in the market in 2025. And when there's gaps, it's important to know how to react. So oftentimes when we see a gap, yes, most of you getting the right answer. The right answer is that gaps tend to be filled. What does it mean by gaps tend to be filled? It means that gaps tend to not last. But if they do, it is very important. So typically, when you see a gap, the market is kind of in panic mode because suddenly a gap happens. They're thinking something is going on. They don't understand. Many novices are thinking something is going on. I don't understand what's going on. Let me sell. And that is oftentimes, what happens when we see the gaps that happen. So, euro dollar, I think is probably best seen in dollar yen because, some of you may not understand the inverse story. So Sunday morning, what do we see? We see the dollar gap lower. And the dollar gap's lower because the market's happy to see Trump's pick for Treasury Secretary. And you see that gap lower. And, in some ways, those of you that say sell is right too. Both of you are right. Usually what ends up happening, and this is an hourly chart, in the first hour or two of trade, especially when it happens during the Asia session, the markets are just opening up. What will happen is there will be continuation. There will be continuation because the market thinks, or traders think, okay, there's a gap, there's something going on, and that story is significant. And there will be a continuation. So if you are there right at the time that the gap happens, and we see this a lot with very, very big news, or let's say Bank of Japan intervention or something like that, you do see, you may see a sudden gap. And when you see that sudden gap, yes, it will have continuation. But the thing here is that you have a choice. Your choice is you can either sell for quick profits, which, I've done before when I'm trading Asia in a big move. But you got that quick profits portion is very, very important because when you see a gap, oftentimes you'll have very brief, abrupt continuation. And then for you more leisurely traders, the gap tends to be filled. The gap tends to be filled. And so the gap happened roughly right around here. The gap tends to be filled because, traders are coming back in. They're thinking, maybe this is not as bad as it thinks. And, you tend to be able to have a lot of volatility after the gap is filled. So even though the gap is filled and the trend resumed again, and this part we don't know about, I'll be 100% honest. The last part, let's call this trade number 1, which is the continuation trade. Let's call this trade number 2, which is the gap fill trade. And let's clarify this as the continuation trade. These are what I call the easy low-lying fruit trades. Trade number 1, trade number 2. Trade number 3 is the hardest one. Is you don't know if it's going to continue and completely fill the gap and erase the move, or reject the gap and move lower. Now you kind of know because you can watch the price action, because if we did break above, I would say this high here, I'm going to use a different color. If we did break above this high here, or more significantly, because it's not too far away, this high here, then the trade is up. If we do reject this, and you see, a significant rejection, then the trade is probably down. But that is the where you've got to watch the price action, and that is where you've got to use judgment and use your levels. But the trades that are almost certain is when you have a gap, you almost certain have 1 or 2 hours of continuation. And then, more often than not, the gap will be filled, and then you watch the price action. So I love to trade gaps. Hopefully, I've shared with you some interesting ways to trade gap and how to approach gaps when you see it. If you understand, give me a thumbs up. If you want me to explain this again, or you want to learn more, give me that thinking emoji and let me know that, you're still trying to process this and you're still trying to learn this. All right, Let me know if you like what I said, hearts, thumbs up, anything. Let me know that you're getting and understanding what I'm talking about. All right. Thank you, Halo. Thank you, John. Wonderful. I love that you guys are participating and that you're letting me know that you are paying attention and you understand this. So, a question here. Why is the pound gap not filled? I mean, they're not always completely filled, right? We had the same sort of price action. It gaps up, doesn't completely fill the gap. It doesn't completely fill the gap, but it's the general direction. And pounds, pounds has big moves. I mean, this is a 50 pip move, which is a good move here. Wonderful. I'm so glad that you guys understand it, because I love to talk fundamentals. We'll talk about fundamentals more in a minute, but we don't often get the time to talk about trade setup because we don't really see it in real time. And, it's not front of mind for me. But today, since we have such interesting price action, I really wanted to take the opportunity to talk about how to trade price action. And, learning how to trade price action and price action trading strategies is very, very valuable. And I want to actually add a video that I did. Give me 1 second. I'm going to put it into the chat. And for those of you that are on Twitter, maybe you want to join us on YouTube, because I'm going to add these links. But this is basically other price action trading strategies. It's a video that I did with a whole bunch of price action trading strategies that I think you should watch. So I see a gap in euro dollar. Can you explain that? Well, this gap in the euro dollar is due to the dollar. I use the dollar yen example because it's the most logical one. It's easy for people to understand. Dollar yen's falling, the chart is falling. So here we gapped up in the euro dollar because we had the dollar suddenly drop. So we gapped up, and there was and there was a little bit of continuation, not too much, a little bit of continuation. That was about 20 pips. Gap attempts to be filled, and in some ways this is where we have the other trade. So you're watching the gap, you don't know, gap gets filled. Do I think that the gap filling here, or sort of gets filled, is going to continue lower, and is it going to move higher? And so your real levels to watch is basically the gap happens, right over here. So do we break this level and continue to move lower, or do we break the top of the high during the Asia session? And we broke the top of the high during the Asia session, and that was, a little bit of a trade. Euro really, is the biggest winner today, and it's more due to how oversold it is. But this is an example of the top of the gap being broken. So there's a lot of different ways to trade gaps. All right. So we talked about how the market's up today. We talked about how U.S. yields are down a lot, and we talked about how basically how you can potentially trade the gaps in the market. Now let's talk about what's going on in the markets, this week, and what we could expect for gold, what we could expect for the dollar itself. So what I want to start with is I want to talk first about, kind of what we're coming off of. So last week, we didn't have much in the way of U.S. data. And as a result, because we didn't have much in the way of U.S. data, we ended up having profit taking. We ended up having profit taking because, there wasn't too much going on that was driving the market flow. And as a result, we saw the dollar pull back a little bit, but not by much. If you're looking at my chart here of dollar yen, you'll see that, dollar yen pulled back a little bit, but some of the other major currencies continued. And last week, because we didn't have much going on for the the other currencies were able to move more. And so this week we have we have a shorter week in the markets. U.S. markets are closed on Thursday for the Thanksgiving Day holiday. We have U.S. stock market, U.S. bond market closed for the Thanksgiving holiday, and then there's also some. New York stock market is also closed on Black Friday. Early closures in the bond market on Black Friday. Basically, any trading opportunity we're going to have is going to be Monday, Tuesday, Wednesday, and don't expect any big moves on Thursday or Friday. Now, this is important because Friday we actually have some very important Eurozone data. So even though we have some very important Eurozone data, because we don't have much going on and much participation on Thursday and Friday, I don't think we're going to have huge reaction to the inflation data from the Eurozone, which should normally be very, very important. So this week, I am dollar bullish because nothing has really changed. The market is still very much divided on whether or not the Fed's going to cut interest rates. Let's actually look. I didn't look at this morning. So I always like to look at the Fed funds tool. And this tells us what is priced in for the last meeting of the year, December. And you will see rates are currently 4.5 to 4.75%. So the market is pricing in a 56% chance of a 25 basis point rate cut next month and a 44% chance of no change. So, this is pretty much 50-50 in my opinion. This is pretty much 50-50. The market is pretty much 50-50 on whether or not the central bank is going to sorry, my video is here, is going to cut interest rates. And that is actually dollar positive, not dollar negative, because this means that the market doesn't necessarily think that it's going to that we're going to get an interest rate cut. And this is the main reason why you're seeing the dollar so strong last week, because the market, you have some central banks that are definitely going to cut interest rates, and the Fed, the market is split on. So that is why my outlook for the dollar is strong. On top of that, the main reports this week are personal income, personal spending, and the PCE deflator. So the PCE deflator, we already know that inflation is pretty hot according to the PCE deflator. So that is also going to reinforce the case that maybe the Federal Reserve is not necessarily going to move interest rates. So John Stock said gold just dipped hard. Kathy, any news or reason for that? I think so. It seems like right now the headline is breaking that Israel and Lebanon have agreed to the terms of agreement to end the Israel-Hezbollah conflict. That's a pretty big deal. That's the reason why. Let's go to the chart. Gold suddenly dropped so much. Look, this is what John Stock telling us. Thank you for calling our attention. Gold is dropping because, of Israel, Lebanon agree to terms of ceasefire. This is what's breaking on the headlines right now, and this is what's driving gold lower. Mideast conflict, obviously one of the biggest uncertainties in the market, and if this is true, and I'm seeing it on, I encourage you to follow Financial Juice. It's really good for news. If it's true, and I think it probably is, then yes, this is significant. This is a pretty big deal for gold. So if we look at our daily charts, let me get rid of this arrow here. You will see that we have what looks like a head and shoulders pattern in gold. And I have previously said that that Trump's victory and his overwhelming victory is bearish for gold. So on a fundamental basis, from geopolitical uncertainty and also Trump's victory, and also technically with this head and shoulders pattern here, head, left shoulder, and potential right shoulder here, that we could, and my whole point of illustrating all of this to you is that we could see this at least go down to here, which is 2,600, and probably go down to here, which is 25.75, 25.50. If all of this plays out, and it does seem like it is. And yes, tamed craziness. Oil dropped another $1. Oil is also down. I would think that oil futures should be down more on this because it's a pretty big deal, but we're seeing more of the reaction in gold versus oil. And we see the dollar, not too much reaction in the dollar. The dollar's down a little bit. But, I don't think we're not seeing too much of a reaction in the dollar. Although this is good for euro. This is good, it's good for risk. It's good for the moves that we're seeing today, but it looks certainly like the oil market yields are moving. They're the first ones to move. And I think that Forex will follow, because we always say that yields move first, Forex moves next. And so I think we should see more euro kind of pick up to the upside. But this is a pretty big deal. I mean, thank you for pointing out this to us. Lee James, I do not think, where's my friends, Lee James? Profit taking is probably why gold is dropping. I do not think that profit taking is why gold is dropping. We just talked about this. We talked about how gold is dropping. Where are all my lines? I don't even know why they moved all the way to the other side. But the reason why, because I was looking at the daily chart. The reason why gold is dropping right now is because Israel and Lebanon have agreed to terms of a ceasefire. That is why it is dropping. It's fundamental news. It's big news. It's, it's like the stories that are happening in the markets. And when we have that, it probably has more continuation. And we do have this, potential head and shoulders pattern that is forming in gold. So yes, I think that gold has continuation. Okay. So anyway, overall, I'm bullish dollars, but if we do have, but this week, even though overall I'm bullish dollars, this week, this Lebanon ceasefire should lead to less of a need for the dollar as a safe haven. And because the market likes the Treasury Secretary pick, I think overall it definitely is a situation where dollar could pull back just on profit taking, nothing else. I don't think that, hold on. I don't think that it is going to shift the overall picture, because if you think about it, Boris, if you want to jump in and talk about, how you're trading gold, feel free.
No, it's okay. You go ahead. You finish up. I'll tell him a little bit later. Because
don't worry, Boris will be trading gold with you close to the New York Open.
Yeah. I'm just scalping it. Guys, you guys know I'm always on the opposite side. I just scalped it 3 or 4 times to the downside. But gold is definitely, fully extended. I expect it to break 26.50, no doubt. And then, then we'll see if we get an opportunity. But I'll be back with you guys.
Yeah, you can explain what you mean. You're scalping the opposite side, but you're selling it because it's falling. So you're scalping the same side, right?
I am buying it, Kate. I'm buying it. I when I'm saying scalping the opposite side means I'm buying all these dips for a very, very quick scalp. Because the guys know how I trade. So,
but gold is moving lower, and so for those of you that are not scalping, the trend is down, and we were just talking to this live.
look at it almost came down. I'm almost certain it's going to break the 650 even as we speak right now. There we go. Breaks down really, really hard, takes out all the stops. It's definitely too early to start looking for a bottom over here. But the great thing is I'm going to show you how using our scalp indicator, the way I rewrote it this weekend, it's going to be super easy to find the bottom in this thing and trade it to the top as we go forward. So I'll let Kay finish up, and then I'll come back, start trading live with you guys when we're ready.
Yes. The reason I'm able to explain to you is because we have real market news happening while we're talking, which is what I'm loving. And it's not really a credit to me, more of a credit to everything else. Yes, gold is bouncing right now. This is what happens. You get a big drop, you're going to get a bounce. And then because it's big enough news, in my opinion, I would be selling into it. But, there's certainly scalping opportunities, the upside that Boris will do with you.
Yeah, and we will also show you scalping opportunities into the trend as well. When this bounces and it's going to give us opportunities to sell, we're going to do that too. It's just that we're going to see on the near term basis at how grossly overextended it is and where the opportunities are going to be on the upside for the immediate term. But I'll get into all the details with you guys in a few minutes.
Well, I'm sure you guys are really excited about this and you want to trade gold because it's moving. So I'm going to run through my part pretty quickly so that we can move to the gold part. Let me know if that's what you want. Let me know if you want to move to trading for me to run through quickly, move to trading gold, or just keep going with fundamentals. Give me a chart for trading, a heart for fundamentals, and I'll listen to you and we'll figure out what we're gonna do. Anyway, while you're giving me your feedback and letting me know what you want to hear, overall, the outlook for the dollar is still positive, in my opinion, and that any dips in the dollar will be bought. Euro is bouncing today, and it's because it's deeply oversold. But while the U.S. is not expected, the market is divided upon whether or not the Federal Reserve is going to cut interest rates at the next meeting. They are almost 100% certain that the ECB is going to cut interest rates. German IFO report was weak, this morning. The PMIs were weak last week. On Friday, we're probably going to get weak Eurozone inflation data too. Germany's got a lot of data. So while we don't have much for US this week, we have a lot of data from Eurozone. And so all of the data is bearish. And Germany is in complete disarray. The government's collapsed, everything is just kind of a mess out there. And so I am bearish euros, but when things are oversold, we're going into holiday. We've got some good news. The market likes percent. So there is scope for a little euro rally, but I'll be looking to sell on the rally, or I'll be looking for opportunities. Let's see where euro is in my zip. Euro is just turning zip positive, which means that we're just going into the buy zone. We'll see. I'm not going to be buying euros this week because my opinion is bearish. So there's no way I'm going to be buying euros. Instead, I might be buying a currency that I'm neutral. This is how I combine my fundamentals with technicals, where if I've got a strong fundamental view, I'm going to pick another currency that I am more positive on. And so that may be the British pound, for example. The British pound's a little bit of a mixed bag because on the one hand, we have a situation where data last week from the UK was very weak. We had weaker, very, very weak PMIs. But this morning, we had Bank of England officials come out and say that, even with the weaker PMIs data, what the main focus is that wages and inflation is hot and that the labor market is tight. And so they are basically telling us that they may not vote in favor of a rate cut at their next meeting. So I think pound is strong this morning. It's not as strong as the euro, which is just more deeply oversold, but pound is strong this morning. And I think that that could be an interesting continuation. Aussie, same story. RBA minutes show that the RBA is not planning to cut interest rates this year. There's no major data from Australia this week. And so, and the risk on is good for Aussie. So same story. I'm going to be looking for opportunities to maybe buy Aussies. Now, CAD overall is bullish, but then oil prices are down a lot right now because of the Mideast thing. So this is going to have to change. We're going to have to recognize that that is more negative than positive. So I'm probably going to change this now to neutral because CAD data hasn't really been all that terrible. I think Bank of Canada, they're still expected to cut interest rates, that they're probably winding down their interest rate cuts. So CAD is more neutral than anything else. This week, we have a Reserve Bank of New Zealand rate decision, and they are expected to cut interest rates. And that meeting is live. That meeting is in play. And so I think there's a very, very good chance we're going to see a rate cut, and we're going to see, it move lower. So I am actually bearish Kiwi. Swiss franc, I'm bearish as well. Just in general, the economy is weak, and I'm more bearish the Swiss franc than the yen, because the Bank of Japan, they came out, they told us that, even despite all the weakness in data, December is a live meeting, and they put a rate hike back on the table. So I am bullish Japanese yen, and I think that the yen, could move higher. Now, just running through the data quickly. We had New Zealand retail sales numbers. They were mixed, but overall bad, I think, because this core retail sales, which is what they really care about, was very, very weak. Trade balance is stronger, but still very negative. The German IFO report was very weak. And then we have nothing really going on to the rest of the day today for North American hours. On Tuesday, we have consumer confidence. The market actually expects consumer confidence to be up after Trump's victory. That could be dollar positive. New home sales expect to be a little weaker. Fed minutes could reveal the Fed, why the Fed thinks that maybe they don't need to continue with such aggressive rate cuts. The inflation data from Australia is very important. This is a monthly inflation report. It's very important. And as you can see, the market's looking for a hotter number, which is also another reason why I am Aussie positive. RBA is expected to cut interest rates by 50 basis points. I don't know if that's going to happen. Maybe it's just going to be 25. But regardless, I think Kiwi is going to move lower ahead of the RBNZ rate decision. And this is a very important one. Wednesday is when we have the U.S. data dump. We've got revisions to GDP. That's not really that important. We have jobless claims, interesting, but they were very low the previous week, probably bump up expected. Most important thing is going to be the most important thing is going to be the data, the core PCE data. The core PCE data, sorry, this is actually the data that is the revisions to core to GDP, but core PCE is important. Personal income, personal spending, these are the data that the market is most in tune with. But given that inflation data already came out, the PCE data is probably going to be high. Trading will probably grind to a halt after the 10 o'clock reports. Definitely by 12 o'clock, as U.S. traders leave early for the Thanksgiving holidays. On Thursday, nothing is going on. U.S. markets are closed. It's, take the day off, don't trade. All right. And then on Friday, we have Eurozone inflation data. That is the most important report. It's somewhere down here. Eurozone CPI. We also have German retail sales, Eurozone inflation data. That is expected to be a little hotter, although I think the risk is to the downside. We also have Canadian GDP numbers, which are expected to be stronger. But because U.S. markets are closed, I don't think that it's going to be as market moving. I think that the market, the market's going to pay attention to it. You're going to get a burst of price action. Do not follow that price action. Do not jump into it. I don't think there's going to be much continuation on that news. So really trading opportunities Monday, Tuesday, Wednesday, and then not much else for the rest of the week. Technically, we already looked at a whole bunch of charts. Gold, let me get back my moving averages here. Gold pulling back. We already talked about that head and shoulders. In terms of gold, this level here there's a little bit of support right here. The main support level is going to be twofold. Over here at 2,600, which I do think it's going to fall to, and then somewhere down here. Bitcoin is pulling back, but I think, the rally is probably going to resume. Eurodollar is bouncing today. And let's bring in our fibs to see, how much of a bounce we can get. We do have a little bit of resistance right over here at 105.41. But I think that if we get a little bit more extension of the bounce, I think that it can go right over here, and that would be a great place to sell. 106 would be a great place to sell, in my opinion. Pound dollar, the bounce is much more lackluster than euro. We're not even above the 5 SMA. So I think there's a lot more resistance above current levels. Dollar Swiss is pulling back. Dollar Swiss has got support right over here at the 200 SMA. I think it's going to continue there. BK Trader is actually short already. Dollar yen off of this double zip sell signal here. 1 zip sell, 2 zip sell. We are already short dollar yen off of this zip sell, double zip sell signal. And the drop in yields that are consistent with this. It gives us a stronger conviction for staying in this trade. So we're already short dollar yen, BK traders, and I think the trade is looking quite good. And I do think dollar yen has more room to go, at least to, there's a little bit of support right over here at 153, which is very far from here. It's a lot of pips to be made from one here to 153, and then the 200 SMA. Aussie dollar, not looking as good as some of the other major currencies, which is interesting, but we are rolling upwards. We got to get above 65.50 to really turn bullish. Kiwi, I'm a seller this week. We'll have to see what the RBNZ tells us, but I'm still a seller ahead of the Reserve Bank rate decision. And then finally, dollar CAD, dollar CAD, it technically looks like it wants to go down, but, because of the huge drop in oil prices today, if we get above today's high, we're probably going to see a resumption of the uptrend. Otherwise, I think that the selling pressure may still be preventing any meaningful gains in dollar CAD. But we'll see. It's a short week. I don't expect huge moves. We're just going to be picking up opportunities here and there. But, as I said, I'll look at oil real quick. Many of you are itching to trade gold with Boris. So I'm going to let him come in and talk about trading gold in a minute. But oil prices are moving lower. This news is a pretty important one on the Mideast, the potential ceasefire agreement in the Middle East. And so we could see a bigger drop in oil prices. But, I think the market wants to see this really signed before this really confirmed. But it looks like it could be. All right, Boris, why don't you go ahead and fire away? And I know that people are eager to talk about gold. Any quick questions for me? All right, I'm going to let Boris go ahead.
All right, guys. Welcome. Hi, everybody. How's everybody doing? Yes, the chart looks like the St. Valentine's Day massacre. As you can see while Kay was talking, I was selling, buying. Really, really nice trades. Hit every one of them. I'll go through some of them with you in a little bit more detail, but let's talk about the fact that I completely rewrote the scalper to make it 10 times more quantitatively interesting for us in terms of analytics. So first and foremost, remember, the critical thing we want to look when we're scalping is whether there is massive moving average separation or moving averages are very tight to each other. And now we have a full quantitative calculation of that on every single bar. So one of the reasons why I was so eager to start buying gold was because, generally our thought process is between 30 and 50 basis points. When they get that wide to each other, that's a sign of overbought or overbought conditions. This thing is 130 basis points off of news. Now, obviously, when you have news, you're going to have much more massive.
Boris, can you explain to me what time frame is this on? What's the red? What's the
1 minute. We're always scalping on a 1 minute chart.
We got a lot of new people here. What's the red? What's the green background? What time frame are we looking at?
Okay, so
what is scalper?
Okay. Any other questions, Kay, before I can start? So
I don't know. You guys let me know. What are your questions? Type into the chat box.
Scalping is the art of doing very short-term trades, usually between 1 and 5 minutes long, where we are looking to capture small but very, very consistent and, more importantly, frequent profits. and more importantly, hold our stops to a very, very small and very, very risk controlled basis. The advantage of that is multifold. I do this with you guys now in London on Bitcoin and gold, and I do this with you in futures. Of course, I've been doing this futures with you in New York for a very long time. In New York, we trade my Apex prop account. And this is the strategy. You don't have to do this, by the way. No, trust me. Plenty of people in my room, you can use this strategy on a longer term time frame with more, more durable stops and targets. As a matter of fact, there are guys over here probably now who are looking to buy the bottom in gold for maybe 10 or 15 points. The key thing is that this type of approach, where you're going to be using very, very small stops and targets, really lends itself best to not only passing the prop test, to prop evaluation, but then maintaining the account, because our drawdowns are so tiny. We keep our drawdowns very, very tight as a result of using small size, frequent trades, and small stops and targets. Now, we trade the 1 minute chart, as I said, because we're looking for lots of interesting quick opportunities. And on the 1 minute chart, the green area, first of all, the red period moving average here is the 200 period SMA. That's the long-term moving average. The blue one is the 8 period SMA. That's the short-term moving average. When blue is below red, obviously we're in a downtrend. When blue is above red, we're in an uptrend. Basic 101 technical analysis. The green areas happen to be upward bursts of upward price action in a downtrend. Obviously, the red areas everything is in a downtrend right now, but the red areas here are sell-offs in a downtrend. Greens are buy-ups in a downtrend. If it was the opposite, if we were above the moving averages, it'd be the exact same thing the other way around. Now, once we have sort of established the fact that we have, trend, which obviously we do, blue below red, we have selling and buying waves. We're always looking at price action as waves, right? So red is a sell-off and downtrend, green is a rally and downtrend because we are below. Yes. Okay. It's just summarizing what I'm saying to you. Now, to make life even more simple and interesting for you, I'm going to get rid of all my trades because I guess we'll just talk about rules first and then we'll talk about trades later because it's just too many trades here. To make life even more quantitatively simple for you, we have momentum signals and reversal signals plotted on the chart. So if you're in a downtrend, the red signals are going to be momentum signals, right? And what we're looking for is if we're in a downtrend, the momentum signal needs to have an L behind it, meaning that it's a lower low, is a L, and the reversal signals also will have an L behind it if it's a lower low. If they have an H, and this is where it gets interesting. You see we have a 5H over here, 5H. That's telling us that this did not make the lower low than the prior number 4 decline did. And we may be getting to a period of consolidation and perhaps a reversal. Once we have a discrepancy in these signals, when we have an H on the lower side, meaning the opposite, we want to see low. Once we see the first H, that's our attention is fully focused, because if we're trading counter trend, we're now looking at potential reversal signals, right? And the next thing we would want to see is maybe a reversal H over here. If we get that, we can trade that on a momentum basis, or we could wait a little bit longer for confirmation and try to buy the dip. We have a whole bunch of, there's literally 4 different ways we can trade this. The most simplest and easiest way is, hey, I get a momentum signal, I'm just going to sell it. I'm going to sell the reds, just going to flow. If you're a momentum trader, going with trend, this is the easiest, best, simplest, easiest solution, right? If you are a momentum trader, but want to kind of counter trend, in other words, you want to sell highs, buy lows in an uptrend. You want to sell rips in a downtrend, buy dips in an uptrend. You want to be a value trader. Then what you're doing is you're going to wait for the reversal signal. Like I'll show you, for example, I traded this reversal signal to the downside. I sold the high over here, and you can see this over here if I show you my executions. So it's hard to see here, but you see me selling over here. I'm selling 50s, I'm selling 49s, I'm selling everything over here on the highs. That's a value trend trade. What that means is, let me get rid of this. That means is I'm selling rips in a downtrend, meaning any kind of a burst to the upside is an opportunity for me to sell at a very favorable value proposition instead of a momentum trade, right? And then finally, if you're a truly counter trend trader like I am, and if you're looking to just simply buy hardcore, you want to buy bottoms, sell tops, well, then you're waiting for divergence. You're waiting for these H's to start appearing. Once they start appearing, that's when we're now getting ready for a possible, maybe a move back up to 2650, maybe a little bit higher. We're looking for some kind of a U-shaped reversal to happen. Now, does it always happen? Of course, it doesn't always happen. And of course, not every signal is going to be positive. But the thing about this is, by doing this, it gives us such an unbelievable edge. Most of the time, we're absolutely able to find reversal signals. We're certainly able to see lots of great selling rips in a downtrend, as you can see over here. And because we're always trading with a very, very small size and are able, if we get stopped out, we're able to reconfigure ourselves on the next potential signal, we're almost always coming out net positive. Every trade I made today, not every trade I made today, but every trade cycle, there was a couple of trades where I got stopped out. I went back, tried it again, and made my money back plus the profit. Was very profitable because of this process. Small size, very, very precise entries, using the indicator to really, really help you quantify your entries, and basically keep you buying when there are, buying the dips only when there are extremes, or selling the flows when the market really, really starts to trend in your way. It really, really keeps you on the right side, regardless of whether you want to be a trend trader or a counter trend trader, by making sure that you're interpreting all of these signals to the best possible ability. Now, right now, what you see here is us just doing nothing, because we don't have a truly confirmation that we're bottoming out, right? We had like the first inkling of a bottoming out, but then we started to drift a little bit lower. And what we're looking for right now is we need a reversal signal to tell us, okay, maybe, if we get a reversal signal that's going to say 5H, meaning that this is a higher reversal than the prior reversal, then yes, we look like we may be able to bottom out, and we're going to try to maybe go the other way. Up to now, it's still a continuity trade to the downside, or at least it's not maybe not a continuity trade to the downside, but we're just simply watching it. It's kind of a neutral position because we haven't made fresh lows over here on this particular label trade just yet. So that's the story in a nutshell of all the various ways how you can trade it. I actually made a video for you guys, which I'll post the link in chat right now, so you can watch the video. It's on YouTube. That explains this in very methodical, step-by-step ways. But I love to, my personal, and again, the beautiful thing about the scalper is it designed for your personality. If you are a momentum trader, you can take momentum labels. If you are a counter trend trader, you can take counter trend trades. If you're a value at trend trader, which is really what I am, then you can sell rips in a downtrend, buy dips in an uptrend at right proper conditions, not at super extreme conditions, but at right proper conditions. And all of those things really help you, put you on the right side of the trade at the location where you're at on the chart. That's what it does. It kind of, geolocates you, hopefully, as accurately as possible. Now, gold is definitely, ripping down. We may have, this could be one of those. Remember, today is a very, very significant fundamental day. When you have massive fundamental days, a lot of the general technical rules go out the window. You have to trade. The first thing I did, by the way, here is I traded micro contracts today. I did not trade the big contracts, precisely because I wanted to keep my risk under full and total control. I did not want risk to get away from me. I didn't want to have $1,000 drawdown because the market is just crazy and it's going to go 10 points against me. Okay, that's very, very important. So keeping myself small, I was able to keep my head cool, get out of positions when I needed to, and also be able to size up without really, really affecting my P&L. That may not be super exciting, but that is really great behavioral techniques. That's best practices that everybody in the room uses. So hopefully this makes it a little bit clear for you. We're obviously dripping lower. Those of you guys who are just trading, pure continuity trend, you're doing great. Those of you who are not, we're just going to be patient and wait for it. Now, in the meantime, we can look at what's happening on indices here. And indices are also kind of interesting here. Indices, as we're looking at it right now, for example, NASDAQ, right? We see that NASDAQ is also kind of overstretched. It's at 40 basis points separation. Like the trade here, while I was talking and I was explaining gold to you, the great trade here was when we were close to each other, when we were compressed, right? We had a buy signal at 2 here. We could have bought this on a momentum basis, or we could have just simply waited for the red to come in on a value basis to try to buy that. But regardless of how we did it, that was a good signal. Now it's a little bit high. It's too rich. The risk here is if we buy here, we have to come back all the way down to like 80 points in NASDAQ. It could come back all the way down to the 200 SMA. And if we're going to have to fight that move to the downside, it's just not worth it. So what we need to do is just be a little bit patient here with NASDAQ, see what the, where the areas print, and actually start looking, at least I'll be looking for some signals of a reversal, where I'm going to get a, an H sign and then a lower, like a 4L sign, at which point I'm going to start looking for some fades on the move. S&P, same kind of a thing. S&P not quite. S&P actually is a reasonable, we're still below our value proposition. So it's 27 basis points. We could essentially buy this, which we're going to do right now. Let's do that. I got to put my glasses back on here. Let's see if we can buy the S&P here. How much time do I have left? 20 seconds left. Okay. So we're going to try and buy this on a dip. Again, I want to buy the dips. I'm in at 35 here. I'm in at 35. If this if this goes all the way down, I'll buy more because obviously I'm starting with a very, very small size. And I'll get a little bit larger. You can't make the perfect trade. You try to make the best possible trade you can. Okay, so great. So we'll just go buy a little bit more now. Okay, and now we're at market, and now I'm just going to try to repair this trade. I'm not going to get too greedy on this. I'm in at 32.75. And and you see how I was able to completely repair the trade and actually make a little bit of profit on the trade on the upside. The key thing you need to understand is that we trade in a very methodical plan A, plan B, plan C, plan D methodology. We know exactly what we're going to do when we go long or go short. We know exactly what we're going to do when we're going to stop out. We know exactly at which level we're going to be buying and selling and what is going to be our second move, third move, and fourth move. Because we have to, in a fast-moving scalp market, have to completely and totally kind of, plan out all the various possibilities. So we're going to know the exact size we're going to use. We're going to know the locations, and we're going to position ourselves properly. Doing that, you see how we're able to quickly react to it. We become like little ninja warriors, ninja traders. We're able to boom, 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 resolve our trades. Now, we're going to sit back nice and tight and watch this. Right now, it looks to me like the S&P is kind of bottomed out, right? So the next move back up, I'm actually going to try to fade this move because I think the next, if we get a 7H, meaning, a label through the, we're going to get an up move here. It's going to be a lower high. I'm going to short this lower high if I get the opportunity. So I'm going to be patient with this thing. That's one possibility. Another possibility is that we sell off so hard that we're going to try and find support at the 200 SMA, at which point I'm going to completely reconfigure myself and start trying to see if I can buy the dip because now the moving averages are going to compress to each other and I want to be buying support. So I'm always want to be selling supply, buying demand on the chart, wherever I am, in proper size, proper targets, and obviously with quick reaction times. So you have to have a plan. You execute the plan. You do this over and over and over again, and it P&Ls you very, very nicely. Let's go back to gold for just 1 second because gold, I think, gold is starting to bottom out. So here's a trade setup I absolutely love. Sometimes it works, sometimes it doesn't, but it's a great starting point, right? Again, for a counter trend trader like me, I love to pick bottoms. So you want to pick bottoms with me on this particular setup? This is what I'm thinking. I love this setup. So what we have here is spike low, right? 5L. The reversal signal actually is lower than this one. It's a spike low, right? The next down move, the next sell-off in here, unless it's massive. Now, if it's massive and it breaks all the way down to 630, I'm out. That's not a trade for me. But if this thing breaks to the downside and stops above this reversal signal, if the red signal is going to be actually above the purple reversal signal, I'm going to be buying it, because that is going to give me a very low risk, high quality value entry for a possible reversal pop, right? Meaning that we kind of puked ourselves out. We're just going to try to stabilize around this level. And if we start to come down over here, I want to be a buyer. Since gold is, the primary trade right now in the morning, let's focus on that. Maybe we'll keep it on. We'll keep both gold and the S&P. We'll just keep an eye on this thing. And if gold starts to go red, as I said, if the candle completes to the bottom, I'm going to be a buyer, given my personality, given my proclivity to want to buy bottoms. You're obviously welcome to completely ignore that. In the meantime, S&P is selling off after kind of picking up a high here. Moving averages are compressing to 20 basis points. So we're sort of in no man's land here, neither good nor bad. Gold watching the 6L, right? Watching the 6L here, right? This is interesting. So gold is dipped. It's 30, 40 seconds. I'm watching the price action here. It needs, I need the candle to complete in order for me to commit to buying the dip. But I will be getting there. I'm just watching to see if this is going to start dipping a little bit for us. And if it hasn't dipped, we'll be a little bit patient. It's okay. If it runs away, it runs away. Nothing I can do about it. But if it's going to dip, let it come down to the 42s. I'm fine with that. Where am I? What's my time here? I got 35 seconds left, 40 seconds left. So there's plenty of time here. If you just watch the stream, if you watch all the live streams, you kind of see somebody's asking me about, are there any recommended videos? Frankly, the key thing is you just kind of want to watch the live streams, because there's a lot of evolution that happens in the live stream, and it's interesting for you to see, because a lot of this stuff is a function of a lot of evolution in our trading that happens. This just did not give me the trade. I was so gung-ho on trading it. It's fine. I'll have to be a little bit patient on this. Maybe we come back and test the lows a little bit later. One of the things I learned myself is how to speak English improperly. But one of the things I taught myself sort of with this setup is you can't be too greedy by anticipating the move, right? If the move is going to happen, let it happen. If the move is going to run away from you, you got to let it run away from you. Because the problem is, if I were to get here, I still have a very reasonable chance of resolving this trade. Even if I get stopped out, I can buy over here. I can buy over here, small sizes. But the point being is, I put myself at a disadvantage, and waiting patiently, even though it's kind of painful, because you kind of see the trade shaping up, really, really helps you. Now I'm going to go on this particular trade. I'm going to be, again, I'm trading micros just to keep you guys here. I'm going to get long here. All right, I'm in at 43.3, and it looks like I'm going to get tagged out again, which now I'm going to get a chance to buy market 41.5 to give myself a little bit of a better entry than I had before. And we may still, I'm willing to come down here all the way down to the bottom over here. So I'm going to want to give myself 3 or 4 more times to come down if it has to puke itself all the way down. As I said, I'm trading very, very small precisely for this reason, because this is obviously very, very dangerous trades, and you only want to do this at small size, so you have plenty of ammunition to resolve your trades. All right. Okay. I am one more time into the trade. I should be a little bit patient at this point now, but I'm kind of trying to see if I could, if I bought this at 39, and I'm actually going to move myself. Once I'm like 2 or 3, levels behind, I'm really not looking to I'm looking to basically repair the trade and come back into it a little bit later. Like this trade is, I knew this was going to be a dangerous trade, and that's why I came in small. I knew this was going to be, a tough counter trend trade. At this point, it could puke all the way down here. So if I can resolve it, great. If I can't resolve it, I got plenty. This is all tiny ammunition for my account, so I'm not crying about it. But still, I don't. No need for me to get larger if I don't have to. But it looks like I am going to have to get larger. All right. One last time on this 8 cycle, and I'm going to have to go to the big contract. All right, and I'm out of here. I'm out of here. I gave myself like the the 8 cycle, but actually now here's where, if you guys kind of want to follow with me, this is where I love to trade, because now I'm pretty confident that we're sort of going to be at the bottom over here, and I can restart again at small size and try to see if I could buy the position. Now my position is fresh. I only have like one size. If this thing works, it's pure profit. I don't have to rework it. If it doesn't work, again, I'm starting only at small size. So the pure profit is going to I'm still going to be able to make pure profit on level 2. So like one of the things I like to do is if I'm behind, I'll just come out scratch, or maybe even a small loss, and reset myself at smaller levels. Now, if I was trading really aggressively, I'd be trading this with a large contract for 50, 100 points, $100 a trade. But because there's so much volatility, and because I really don't need the aggravation, here we go. I completely, recovered. I made fresh profit on this trade because I saw that this was essentially a bottoming formation. But it took me 2 or 3 tries to kind of figure out where the bottom was. On the first cycle, I kind of just washed myself at a near profit, and then I came back at smaller size. Now it gets even more interesting, because now, as we're watching gold, we're definitely going to be consolidating. And now if we start going back up, back down, we're probably going to be making higher lows, and that's going to give us much greater confidence that the thing is starting to turn, assuming this doesn't break fresh lows. But if it does break fresh lows, I'm prepared for it. I'm out of the trade. I don't have any positions on. I'm just going to let it play itself out. In the meantime, because I'm focusing on gold, I'm really not getting a chance to trade the NAS. Like, remember I said to you, I really wanted to buy the NAS at the 200 SMA. Let's see what NASDAQ wants to do here. If I have a red candle through the bottom here, I'm probably want to be a buyer here because the moving averages have compressed, and I want to buy into this support here. But I don't have the red candle, so therefore I don't have it. Okay, so look at this. First positive sign of a reversal. The 6H is telling you that the reversal turn is higher. Now, you guys want to have fun? If this thing stays 6H, we can do a momentum trade. You want to do a momentum trade? For those of you guys who want to do momentum trades, if this thing closes at H, I'm going to get long this thing on a momentum reversal. If it does that for me. If it doesn't, then I obviously don't have a trade. But my natural inclination is to always be a buyer on dips instead of a buyer on rips, even in a reversal basis. But because we're in a reversal basis, here we go. Buy market. All right, I'm long this thing on a reversal basis. It'll be interesting to see, whether we get enough juice here to come back up, or whether it's going to stop me out on a retrace. The key thing, the reason why I don't trade momentum is because momentum is very, very frequently a stop out. In other words, you can be right on direction and wrong on the execution because it's going to stop you on a retrace. At which point I'm going to have to fight the market again at lower prices, but not quite as low as if I was buying the dips. But I wanted to show you the momentum moves just as a technique for those of you guys who love to trade momentum, because there are lots of people who just want to just buy the labels on a momentum basis, and this is an example of it. So the target here is going to be 43.6 off of a momentum move, and it wasn't a horrible trade here because we had so much sell-off that a tiny momentum, counter trend momentum, is feasible. It's reasonable. It's reasonable for us to get up to 43. Whether we get there or not, we'll have to see, because remember, momentum generally has a retrace risk behind it. So this trade may not work for us. We may get retraced out, and if it doesn't, I'll have to figure out if I really want to fight this or not. But 7 low. See, with the trade that I would love to have done was buy this. Let's do this. Okay, so what I did is I bought the red. I like to buy the dip instead of buying the rip, right? Let's see if my instinct is a little bit better on this. It may not be. We may come back down again. If it does, it's fine. I have small sizes. I'm going to give myself to 4 size if I have to. There is a small but significant risk this thing could break the lows. And if it does, we have to just let it go and then wait patiently for it to kind of reconfigure itself. Because remember, I'm at small sizes. I can always get larger into the full gold contract and recover all my tiny little losses here. But obviously, that requires more time, more effort on my part. Not a thing I want to do. Watching the S&P kind of breaking into the bottom here. This is not. I would not be. Today is kind of a crazy funded day, so stepping into the fire could be painful. But I'm not opposed to like buying this thing right now on this move. All right, so my buy the dip on 7Ls here. And remember, it's not a perfect trade because what you really want to do is you want the 7 to be this is a lower low on the Ls, right? So now I'm going to have to be a little bit more patient. See if I can buy this. Okay, in at 37. Basically now, if I get stopped out, it means we're making fresh lows. Okay, so then I would have to pause, get myself a lot larger. But once I have a bottoming formation again. Well, let's see if I can resolve this one. We'll see. I'm not holding my breath, but then again, I'm also not crying. Oh, everybody likes you guys like my windbreaker. Well, part of it is because it's just cold in New York City, but also part of it because I'm kind of testing the look, guys, because I ordered a BK Traders jacket. Okay, so we got done on the full reversal here, so that worked, right? Yeah, that worked perfectly fine. And I was able to resolve this trade on the move. The cool thing about that, of course, is it sets me back to my original size. So now I can go small size profit. This turned me into a small profit too. So I'm net positive. I told you guys wanted to buy this one. I'll have to wait. Right now, we're kind of really getting the moving averages are so compressed that they look like they're going to turn negative, and I want to be a little more patient with the indices. Gold here could have a second puke wave, and if it does, we're going to have to be patient. And hopefully you guys can hang with me a little bit today, because if we make a fresh low here, I think this is going to be the near-term low. Like right now, this is basically a double bottom. I'm going to have to watch the reversal labels. I'm going to get another reversal label here. We'll see. If we get a reversal label and then a red label higher, like an 8H, that will give us really good confidence that we have a reversal in the making. Oh yeah, so Chippy, I was going to say that I am I'm looking to we have the BK Traders logo, so I'm going to get the logo with a motto on there, and get that soon. Look at that. See my instinct to buy the S&P here kind of worked out, but we'll give it. I want to give it some time because honestly, when you're looking at the S&P today, the indices had this big jump, and now we're kind of puking down, and now we're just in no man's land. And it's very, very unclear of what we're doing. So I really want to wait probably about 5-10 minutes and see if the price action starts to move to the downside, or the price action is just going to consolidate it, move back into the upside. We're very much in no man's land. There's no direction here. Not really worth it for us to commit to one side or the other side. This, in the meantime, really trying to fight the double bottom here. So the bottom was around 34s. We're kind of holding the bottom. Let's see if we get a positive purple label here for the time being. Is it made in the USA or China? Nothing is made in the USA, my friend. I don't think any of this. This is North Face, actually. I don't know. Where does North Face make their stuff? Probably Indonesia. Okay, 7L. This is interesting. That's not a great sign. Like that's a reversal, but not like a truly beautiful reversal. Now you want to be a pure degenerate and go along with me. Let's do that. Why not? This has got to hold, though. By the way, let's not jump into the candle. Candle's got to actually produce a reversal signal for me. So I'm not jumping into this thing. But if I'm jumping into it just on a purely degenerate basis, on very, very small size, just for fun, just for shits and giggles. This, on the other hand, is I don't know. It's giving us nothing here. Okay, 6 seconds. Let's watch the gold. Let's have fun with gold. All right. Okay. In at gold, target is going to be 41.4. Just on a momentum reversal basis, even a pretty weak one too, because we don't even have the H, we have the L. But it's kind of a reversal signal. We held the lows, so I'm taking a punt. This is a pure punt. This is completely not part of the perfect rules that I have. This is like barely 30% reasonable rules. Like, there's 100% trade, meaning it's a perfect trade. You really have everything lined up. There's like a 50-50 trade. This one is like the 40-30 trade. It's barely acceptable that you should consider it, which is why I'm probably going to get stopped out on this thing right now. But I took it, on a purely, as I said, degenerate basis. Because we're always seeking. Okay, so at this point, honestly, not a trade I want to take, because I don't have literally any confidence signals. These are all L's. L's are telling you we're going lower. Until I see H's, I don't have any objective, reasonable thing. This is just me fucking around, and we're not going to do any more fuck around trades. This was the only fuck around trade I did today. And we're going to be very patient, because the beauty of this indicator is it will tell you. You don't need to be guessing, Meantime, S&P turns positive, which I like. Turns positive on the 200, and now I want to give it 5-10 minutes. If we kind of recover the trend, I want to look for long opportunities on the S&P. You took the sell trades out of. You took this. Amari says, what does Amari say? I'm trying to understand what you're saying, Amari. You took sell trades of the demo, took it from Apex. If you took it, I guess if you just sold the trend, you'd be rich. Of course, if you just knew the future, you'd be wealthy. Who's it? Oh, I was watching Elon Musk today, actually. And this was really interesting. They asked Musk, what does he consider sign of intelligence? And that was, you know what his answer was? It was really interesting. Really interesting. Okay. Choppy stuff on the S&P. So I don't have, we're basically giving sell signals, buy signals, one after the other. I don't have any confidence either way. So I'm just going to stay put. So Musk said, Musk said that the true sign of intelligence is how well you forecast the future. Just that was really interesting. Like how well, I mean, it actually, from a biological, evolutionary point of view, it is absolutely the correct answer, because the species that can forecast the future best and therefore adapt and adopt to it is the species that survives. I mean, that's all we're doing here on a micro level all day long. See how this dropped really, really hard? That's why I just sort of stood away from it. That was a fake up move that turned into a down move. We're now much more negative biased. And now I'm very interested in any purple trade that goes up through the moving average, or a reversal trade. In the meantime, this gold continues to drip lower, right? Drip lower, and I stayed away from it. I didn't do any stupid trades, and as I said, I don't have any quantitative reason to want to be long here. The only thing I can take a minor degree of solace in is that they haven't really broken the bottom here. The 34, 33 is holding, and the longer that holds, maybe it's going to create a reversal signal for us. But in the meantime, S&P is clearly now moving into a down signal. Look at us. So look how cool it is. The width now is about 4 or 5 basis points, just starting out. We love that. Anywhere below 30 basis points, we want to be positioned towards the trend condition. Anywhere above it, we want to be looking for reversal signals. Of course, when news happens, reversal signals are far, far wider than 30 basis points. We have 130 basis points of width here. So this thing is really, really wide. But what I find is interesting on gold here is not really breaking the lows, right? This 30, maybe it'll test 33s, 32s. Like it's not really puking, which is what I'm looking, I'm not really having any deep sell-offs beyond this basis. So it should be really interesting. Let's see if we get, you guys have a few minutes, right? You can hang with me a little bit later today. I don't have to do anything for a while. Let's give us 10, 15 minutes, see where the price action is. Maybe we get a chance to pick up a nice clean reversal. Oh, I'm totally, Kay put up the Apex things. I totally forgot about it. Everybody sign up for Apex. The codes are here. I think they put up the code now back to 80% off. If you guys want my indicator, you can just join us for a month. And if you want my coaching, you can join me every Tuesday for a while. Look at the development of the down move here. Pretty significant development. I wonder if we're going to test the 6,000. It looks like we might go right back down to 6,000. All right. So painful as I want us to be, this is still an 8L. It's still a lower fucking low. It is not a reversal signal. Even if this thing does a V-shaped move, I'm not going to take this trade. I'm not going to just cowboy and free base on rules. I'm going to stay consistent to my rules. See that? Still give me an 8L. How you guys like it? By the way, let's do a little poll. This is a really, really bogus poll because I'm just fishing for compliments. I'm truly fishing for compliments here, guys. So, watching the S&P, right? So here's the S&P. If we get a purple through this thing, assuming it doesn't just blow through the 200 period SMA, I'm actually want to be short this thing. I want to be short the S&P on a rip higher because now we've established a downtrend. We have moving average separation that is not extraordinary. In other words, not super wide. And if we can get a move back up, I'm hopefully going to get a good value interest. Yeah. Oh, Cat. Thanks for reminding me. You know what? Hang tight a second, guys. I'm going to actually give you, because this link is not. It's a private link. I'm not. It's. I just didn't want to publish it on YouTube. Just hang on a second. Let me find this link. I'm going to give you guys in chat. You can watch this. Here it is. It's a walkthrough. You can watch this, and I really walk you through as slowly as I possibly can on the trade, because it is, being kind of thrown into live scalp with me. And it is a little bit hard. Okay, so I got a one purple move here. 56 seconds left. I want to be short this thing on the close of the candle. Still L's on the gold, so nothing going on over here. So let's go to S&P here. 39 seconds left. I'm waiting basically for the S&P candle to close. 16. Where are we? Much time do I have? 30 seconds left. So still like 30 seconds in that candle. 17. This thing is really racing. 13, 14. I'm in at 1675. Kind of rushed it a little bit. If I get stopped out, I'm going to get larger, of course, on this thing. Not a problem. All right. Fuck. I hate taking the. I should have used Trade of 8, but I'm just showing you visually. I took a small clip on this because I want to go back again out and see if I could sell this again at maybe 1650. Not getting it. I'm trying to get cute with this trade. I wasn't. I was just impatient enough. I wasn't patient enough to try to take the first profit to its full profit. But let's see if I can get it to 1650 here. No, I'm not getting it. So I'm gonna kill myself. I'm gonna kill myself. I'm gonna kill this trade. Sorry. So as you guys know, when I'm trading live with you guys, very often I don't quite execute as well as I should. Meaning that I open the trade relatively well, but I should have closed it at full +8. I only closed it for about +3 ticks because I rushed my exit, hoping to try to get another trade. But those of you who were patient enough to actually shorted this thing at the proper size, proper target, it was a perfect trade. I mean, honestly, the part of the reason is because I'm keeping my eye on gold here, but gold is just not giving me anything. So it's not a, I'm just, the great thing about using my indicator is you can wish all you want. You can wish all you want. You can fantasize all you want. But until you get the signal, you don't do anything, right? Like I love the fact that this indicator basically tells me, I'm going to try to be polite. Do not rush. I was going to say something quite New Yorkish. As my kids when they were in high school used to say, and this is an expression only New Yorkers would appreciate. I'm not gonna give you the full expression because it's really raunchy. But the expression is hop off my D, meaning get the fuck off of me. Do not approach. Do not do what you're about to do. So, like the great thing about this indicator is it tells you hop off my D. Do not try to be cute here in trying to find the bottom until you get the move. So if you guys want to do a momentum trade here, I don't do momentum trades, but this is a good momentum trade. It's a 2L, right? You want to sell the 12s. decent momentum trade. May fully give you the full 10, on this move here. Although, sorry, this was the momentum at the last second. At the last second, it disappears. So now this is the candle that becomes the momentum candle. So we have to be patient on it. But anyways, if nothing else, you learned a new proper expression out of New York. Amari says very New York. Exactly. But it's very accurate in terms of describing. This is Sweetwater. I'm running, because the game plan here is to run a couple of the large 250s, because I have a bunch of 50s that I passed, but I haven't passed the 250. I want to run a couple of 250s to its full conclusion, which is a much longer, deeper, harder journey than running the 50s, because you got to make a lot more money, you got to control risk, and I'm doing it really because a lot of people like to, they want to trade with the big accounts. It's a much more difficult challenge. So the idea is we're gonna, hopefully by Christmas this will be funded, and then we can trade this live. Amari's ears are burning. That's not even like the worst of New York slang. But anyways, you see the gold is just dripping. But here's the interesting thing about gold: as it's dripping lower, the rate of decline has really slowed. Right, we're kind of really holding on the move here. Not much going on over here. Same with, by the way, S&P. S&P is kind of just holding underneath here, not doing anything. But where selling the rip really worked nicely was right over here. It was a great rip trade to the downside, and worked opposite. Yeah, we're just you have to be super patient. Gold is just not showing us anything, and gold is right now actually making fresh lows. It's a drip lower trade. There's just enough negative flow here that the buyers have not showed up. Right? What time is it? 10:30. London cut is going to come in about an hour. We'll see if all the puke selling is done. I'll hang with you guys for another 10-15 more minutes. Maybe we get a signal in gold here for a reversal. We'll stay patient with it. In the meantime, S&P just sort of died a little bit. Where's NASDAQ doing? What's NASDAQ doing for ourselves? NASDAQ is NASDAQ actually had more of a cleaner trend trade, right? Cleaner trend trade here. That was easier to do. First of all, you had nice momentum moves here. You had a 3L and a 4L. Selling this NASDAQ over here at 903 and then following up with 914 on a second move would have been perfect. I just, we were just so obsessed with gold today that we haven't really focused on NASDAQ today. NASDAQ now is about 31 wide. So we're at that area where, and by the way, we have a 5H, 4L, where it's not unreasonable to want to buy the dip here on NASDAQ. You guys want to have, I'm going to just buy the, I'm going to buy the micro here on this dip. This would be a 6H buy, and let's see if this is going to work. Yeah, it's going to work nicely. So that was like a plus 30 ticks on NASDAQ, very, very fast. Why did this work? Because this was a low 6H, right? Even though we didn't have quite the reversal signals, it was not bad. It was like this was buying the dip in a thing that actually moved very, very nicely on the move here. Where's gold? And now gold is I thought gold was I thought gold was finally starting to bottom out. No, gold is my Moby Dick today. I'm just hunting it for for no reason. So 2L on S&P, and now I get a reversal L, and now I kind of want to sell this reversal L on the S&P. So remember, in a reversal basis, if I get an L, that means it's telling you lower, like prices can go lower, right? If it's giving you an H, it's telling you the prices could be reversing. So I'm going to try and lay this out here at 16. on this move. If this thing, goes all the way vertical to the downside, fine, no big deal. Oh, where are we? Are we on the? Yeah, let me go to the S&P. Just you guys are not watching this trade here. Okay, let me watch the trade with you. Captain Ahab to the rescue. All right. So this week, guys, price action is going to be like this. It's going to be like watching paint dry because it's holiday. Nobody really is going to be. I mean, gold was interesting today because of this geopolitical. And we're done with. Thank you. We're done on S&P. That's my money butter trade. Butter trade. I wish there was an emoji for butter. Is there an emoji for butter? Is there? Anyways, the trade that I love, I absolutely love this trade, and I called it out to you guys as I said it, is I love to sell the rips in a downtrend. Because why? I get the value note, I get the value high. It doesn't have to come back a lot in order for me to make money. It doesn't have to go momentum high. And if I'm wrong, I'm going to get shorted at a better, higher level, right? Now, what's the one weakness of my strategy is if I get a V-shaped recovery, if I'm just going to go, totally from bottom to up, and I'm going to just eat after 2 or 3 times, then yeah, I got to stop and I got to reassess. But that happens very rarely. V-shaped moves are pretty rare, especially with the new indicator that kind of gives you, great quality short-term signals. Now, by the way, finally, gold. Finally, we found the bottom of the 30s. Now we're probably going to start getting a little bit of signals over here. But I got to run, so I can't really hang with you guys on a gold reversal trade. But there should be a couple of good gold reversal trades over there. In the meantime, up a couple $100 today. Not bad for just fuck around trading on Thanksgiving. I am doing London tomorrow. I'm doing New York tomorrow. I'm going to do London Wednesday. I'm going to do New York Wednesday, and then we're going to be done for the week. So definitely, everybody come in hardcore. We're going to trade Bitcoin. Very cool thing, by the way. Those of you guys who are in London, and if you're with ACAP in London and you can't use MetaTrader, I'm going to show you how we can use the same technique, the same indicator on Bitcoin with TradingView. Okay, with TradingView and the saved stops and targets on TradingView should work pretty well. I have the account today. It was definitely working. So hope you guys had a good time. Everybody go get some Apex accounts. Everybody go get come join me if you guys want to watch Kathy trade live. I just put in the discount link again. Let me put that in there, and let me put the Apex link for you guys. Because we love Apex. By the way, if you want to follow the discussion, we haven't even talked about this. Maybe we'll talk about this tomorrow when we have some time, because today was just kind of all crazy. If you want to follow the discussion on prop trading and the shit that's going on with Top Step, which I really hope Apex doesn't follow. I mean, I never know. You never know. Everybody might follow the footsteps, but it is, in my opinion, very problematic. Let's just call it that. I'll be diplomatic instead of just giving my true words of trading live prop. The primary negative reason. I mean, it's fine. Trading live prop, you're still protecting your own capital, so you're trading with the firm's capital. But the primary negative aspect of trading live prop is it's going to cost you $1.45 every month for professional data fees. And we can have a long discussion about all of this. I don't know why you say that, John. I have back it up with facts. ACAP has the best spreads I've seen. So I have like perfect execution, and there's hundreds of traders in our room who trade with ACAP. So, your opinion ain't worth shit unless you got some facts to tell me. It's CME led, absolutely, and we're probably all gonna have to eat this eventually, because remember, we all exist to pay CME commissions and pay CME data fees. Here's your thing. Reason they cut is because you were at 200 to 1. They cut it to half without notice, because at 200 to 1, you're taking 10 times the amount of leverage that you should be taking, and then you're upset that they cut it back because of risk reasons, because of volatility. I mean, again, bullshit reason, John. Okay. If it was execution, I would listen to you. But the fact that they cut risk because you were trading way too large a risk, it's all your fault. Own your problem on that one. All right. What about ODP? It doesn't matter without notice. Of course, do you think that the Chicago Mercantile Exchange gives you notice? Do you think anybody in the world, do you think that this is a game where everybody's like, oh, take me for all the money I have, take me for all the leverage I have. The markets are going to move 1,000 points in a tick, and I'm going to give you 3 days to change your margin requirements? Get the fuck out of here, John. This is markets. Markets move fast. This is why if you're trading 200 to 1 leverage, if you're driving a Porsche at 500 miles an hour, expect to die. Don't blame the car company for the fact that you're driving 500 miles an hour, okay? You want to survive, you drive 55 or under, okay? That's how it works. That's literally all I got to tell you. So you see me? What am I trading today? I'm trading the biggest pussy trades ever. I'm trading micro contracts all day long because I'm driving 55, and I survived today and went on to win. The only lesson I can give you guys today is you want to crash the car, you drive 500 to 1 leverage, 200 to 1 leverage, 100 to 1 leverage. You want to survive for the long run, you drive like a grandmother from Pasadena. That's the biggest lesson everybody needs to learn. Trust me, I've learned it 1,000 times. I've crashed my car into the wall 1,000 times. Finally, I've learned that lesson. Oh, we're getting an H. We're getting an H in gold. Anyways, guys, I'll leave it with you on that one. Everybody have a great day. ODP is going to have a webinar on Tuesday. Really, really sweet. I have flipped the script on ODP. It's going to be money. So come hang out with me on the algo trading. But otherwise, I'll see everybody in London tomorrow and New York tomorrow. Another good start for the week. I love the new indicator. It's really keeping me out of trouble, really keeping me from doing stupid ass trades, which is 90% of the game, right? What did Woody Allen say? 90% of life is just showing up. Couldn't be truer about trading. All right, everybody have a wonderful day. I'll see you guys later. Over and out. Take care.